Money has always been about imagination. For thousands of years, we've given value to things that don't physically exist. Gold on paper, digits on a screen, promises backed by trust. And in the world of crypto, that idea has evolved again into something called Synthetix. Synthetix is a project that asks a daring question. What if you could trade anything, from gold to Tesla stock to the price of oil, without ever owning it? Not through speculation, but through a transparent, decentralized system where value itself can be recreated, mirrored, and traded on-chain. It's the blockchain version of a financial superpower. The ability to create digital versions of real-world assets, called synths, that track the value of everything from currencies to commodities to entire indexes. This isn't about imitation. It's about accessibility. In traditional finance, access to global markets is restricted by borders, licenses, and intermediaries. Synthetix removes all of that. It opens financial doors that were once closed to ordinary people and builds a system where markets exist for everything and everyone can participate. But it's more than just technology. It's a statement that finance should be open, transparent, and borderless. Because when you strip away the complexity, Synthetix is trying to answer one timeless question: who gets to define value, the few or the many? And that's where the story of SNX begins, with a simple belief that the future of finance doesn't have to be owned by institutions. It can be built, one synthetic asset at a time, by the people who use it. Every movement starts with someone asking, why not? For Synthetix, that person was Kane Warwick, an Australian entrepreneur who saw how financial systems kept repeating the same story: innovation for the few, exclusion for the many. Before Synthetix, Kane had already been exploring digital currencies through a project called Haven, a stablecoin platform designed to bring stability to volatile crypto markets. But he soon realized the bigger opportunity wasn't just creating a stable token. It was creating a system where any asset could exist on the blockchain. That idea evolved into Synthetix, launched in 2018. Its goal was simple but groundbreaking: to enable people to create and trade synthetic assets, digital tokens that represent the value of real-world assets. Here's how it works. At the core of Synthetix is the SNX token, which powers the entire network. Users stake SNX to mint synths, digital assets that mirror the price of things like gold, Bitcoin, the euro, or even the S&P 500. These synths don't physically hold the asset they represent. Instead, they're backed by over-collateralized SNX locked in smart contracts. This ensures that even if markets swing, the system remains solvent. For example, when someone creates a synthetic version of gold, SXAU, its price automatically tracks real gold through price oracles, decentralized data feeds that pull real-world market information onto the blockchain. This architecture creates something revolutionary: a borderless derivatives market built entirely on-chain, without brokers, exchanges, or clearinghouses. Behind it all, Synthetix relies on Ethereum and Layer 2 scaling solutions like Optimism to handle thousands of transactions cheaply and instantly. This means traders can interact with synthetic assets at a fraction of the cost and speed of traditional markets. But Synthetix isn't just for trading. It's a financial protocol, a base layer for an entire ecosystem of DeFi applications. Other platforms like Kwenta, Polynomial, and Lyra build on Synthetix to offer decentralized exchanges, options markets, and automated trading strategies, all powered by SNX. What makes this vision powerful is that it mirrors something ancient: the idea of money as representation, but reimagined for a transparent, decentralized world. Traditional finance hides complexity behind banks and regulations. Synthetix makes that complexity open source. Anyone can see, verify, and participate in how markets are created and managed. And in doing so, it asks a deeper question about value itself. What if the future of finance isn't about what you own, but what you can access? That's the philosophy behind Synthetix. Not replacing Wall Street, but rebuilding it on open code. A new kind of financial world, permissionless, programmable, and powered by trust you can verify. The true power of Synthetix isn't just in what it builds, it's in what it enables. In the world of decentralized finance, Synthetix acts like a foundation, a silent infrastructure layer that powers countless applications without most users even realizing it. Its ecosystem stretches across multiple platforms, creating a web of financial access that feels as fluid as the internet itself. Let's start with trading. Through platforms like Kwenta, users can trade synthetic versions of almost any asset, from crypto pairs like SBTC and Seth to real-world commodities, indexes, and currencies. There are no middlemen, no broker fees, and no gatekeepers. Every trade happens peer-to-contract, settled transparently through Synthetix smart contracts. Then there's Lyra, a decentralized options protocol built on top of Synthetix liquidity. It lets traders buy and sell options on synthetic assets, just like in traditional markets. Except here, everything runs autonomously, governed by code, not corporations. Polynomial takes it one step further, offering automated trading vaults that use Synthetix derivatives to generate yield for users. It's DeFi at its most sophisticated, yet completely open. This interconnected ecosystem, powered by the same collateral pool of SNX, is what makes Synthetix unique. Liquidity isn't fragmented across hundreds of tokens or exchanges. It's unified, shared, and composable. That means when someone trades synthetic gold, it can instantly balance liquidity with someone trading synthetic euros, a feature almost impossible in traditional finance. The impact goes beyond trading. Synthetix has also created opportunities for developers, data providers, and ordinary users. Developers can build new financial apps using its synthetic asset infrastructure. Data providers earn fees by maintaining accurate price oracles. And stakers, the backbone of the network, earn rewards in exchange for securing the system with their SNX. This ecosystem has quietly influenced much of DeFi's evolution. The concept of shared liquidity pools, synthetic assets, and decentralized derivatives has inspired dozens of projects across Ethereum and beyond. But beyond the code and contracts, the human story is what makes it matter. In traditional finance, access is privilege. In Synthetix, access is design. Anyone with an internet connection can trade global assets. No banks, no approvals, no bias. It's financial inclusion redefined. A system where markets are no longer gated by geography or wealth, but open to participation by anyone curious enough to learn. This is the promise that keeps the Synthetix ecosystem alive. A belief that markets should be open, transparent, and fair, not manipulated or restricted. And yet, building a system this open comes with enormous challenges, both technical and philosophical. Because when anyone can mint and trade synthetic versions of anything, the question isn't just how far it can go, but how safely it can grow. Every groundbreaking technology walks a fine line between innovation and risk, and Synthetix is no exception. The idea of recreating global financial markets on-chain is bold, but it comes with challenges that reach deep into the foundations of both technology and trust. The first major challenge is collateral and stability. Every synthetic asset in the Synthetix ecosystem is backed by SNX tokens locked as collateral. But as the value of SNX fluctuates, the system must constantly adjust to maintain solvency. Too little collateral, and synthetic assets lose stability. Too much, and capital becomes inefficient. Balancing that tension has required continuous innovation, dynamic collateral ratios, adaptive reward systems, and new risk management tools designed to keep the system robust even during extreme volatility. The second challenge is complexity. Synthetix is not easy to understand, not for newcomers, and sometimes not even for seasoned traders. It combines derivatives, staking, governance, and oracles into one ecosystem. To solve this, the community has invested heavily in user experience and Layer 2 scaling, bringing fees down and interfaces closer to something ordinary people can use. Then comes competition and interoperability. The DeFi landscape evolves fast. Dozens of new protocols are emerging with alternative models for synthetic assets and derivatives. But instead of competing through isolation, Synthetix has taken a collaborative approach, focusing on integration rather than dominance. It works closely with protocols like Chainlink, Optimism, Curve, and Aave, building shared infrastructure that strengthens DeFi as a whole. On the innovation side, Synthetix is constantly evolving. The team has introduced Synthetix v3, a modular upgrade that makes it easier for developers to launch their own markets, integrate new collateral types, and expand beyond Ethereum. This opens the door for multi-chain growth and real-world asset tokenization, the bridge between traditional finance and decentralized markets. They're also exploring synthetic real-world assets, RWAs, like tokenized equities, carbon credits, and commodities, bringing the next generation of finance onto the blockchain. Governance is another frontier. Through Spartan Council, A decentralized decision-making body, the community votes on upgrades, parameters, and strategic directions. It's a living example of democracy in code, imperfect but evolving. The future of Synthetix lies in this balance between autonomy and structure, between vision and execution. It's not about building the biggest DeFi project. It's about building the most resilient one, because when the world's financial systems start integrating with blockchain, they'll need infrastructure that's already tested, transparent, and trusted. That's where Synthetix quietly positions itself, not as the next hype cycle, but as the backbone of open finance. Its mission remains the same, to make financial access universal, programmable, and unstoppable. And that's where the story leads next, to the deeper meaning behind Synthetix's revolution. Every era of finance has had its turning point, a moment when the rules of value changed. Gold once defined wealth, then it was paper, then digits in bank databases. Now it's code, open, verifiable, and borderless. And that's where Synthetix stands, not as a company, but as a symbol of that shift. Synthetix is about freedom through representation. It's about giving people the power to access the world's financial opportunities without asking permission. It's about turning markets, something once locked behind corporate walls, into an open, public playground of innovation. For centuries, only a few had access to global assets, the right brokerage, the right passport, the right connections. Synthetix erases those boundaries. It lets anyone, anywhere, trade the world, not through speculation, but through digital mirrors of real value. That's what makes it powerful. Not just the technology, but the philosophy behind it. It's the idea that finance can be open source, that money can be programmable, that wealth can be inclusive. Synthetix doesn't promise riches, it promises access. And that's far more revolutionary. The SNX token is more than collateral. It's participation. It represents a stake in the infrastructure of the future, where liquidity, stability, and innovation aren't controlled by corporations, but by communities. In this world, the concept of trading changes. It's no longer about buying low and selling high. It's about contributing, staking, providing liquidity, securing the system, and in doing so, owning a piece of an evolving economy. And that's what makes Synthetix deeply human. Because at its core, it's not about machines trading assets. It's about people building trust, one transparent transaction at a time. We often talk about decentralization as if it's just technology. But Synthetix reminds us it's something more, a philosophy about fairness, about putting power back in the hands of individuals. It's easy to forget that the biggest revolutions in history didn't happen through force. They happened through access. When information became open, the world changed. When the internet became open, communication changed. Now, as finance becomes open, value itself is changing. And somewhere between that transition, between Wall Street and Web3, Synthetix stands quietly, building the bridge. It's not the loudest project in crypto. It doesn't rely on hype, but it represents something far more enduring, a proof that decentralized finance can be both powerful and responsible. In the future, when people look back on how financial freedom went global, they may not remember every protocol or chart, but they'll remember the ones that made access possible, the ones that didn't just create markets, but opened them. And that's what Synthetix is. Not a platform, but a principle. The belief that value, like knowledge, belongs to everyone.